certain sure that I displayed that disclaimer in the starting.
Yes, for sure.
Yeah. Hey, welcome, Aisha. How are you doing?
Very well. Thank you so much, Sachin. Thank you for having me.
It's my pleasure to invite you, and actually, it's an opportunity to learn from you. You're right in the middle of opaque country, so you will know things which I don't know. And just for the benefit of audience, I think let me just introduce both of us just for the time being. Okay,
Sure.
so yeah, so I mean, Aisha work as an investment strategy and corporate banking in Middle East. Okay, she is based in Dubai. She has invested more than 18 years now. I mean, in the industry, in the corporate banking with different banks and different positions. And she has a Substack where she discuss about the ideas of investing and what she is monitoring, which I regularly follow. And I would request, I mean, give it a try. I think this is something you might like. As far as I'm concerned, I spent my career in energy industry, including strategy and mostly in the operations with Schlumberger. So that's pretty much me. Uh, in my last, especially 4 or 5 years, I've been involved with more and more with client in terms of strategic development, energy transition, the impact of oil price. So this is something I monitor on the day-to-day basis. So hopefully that gives you some idea like what is going on. So before I start anything, Aisha, this is the news that just came in today. Okay, and the news says that U.S. expected to announce the ban on Russian oil as soon as today. And the oil was when the news came at that particular time, the oil is already at 124 and 138. Now this is important to everyone to understand that there is a lot of expectation of oil price at this particular time and upcoming supply disruption, but supply disruption has not yet started on the ground. I mean, if you go to a gasoline station, you will pay top dollars to buy the gasoline, but you will still buy it. So we are near $130 territory before disruption. So just keep that as a mind. So what do you think, Aisha, is going to happen here as soon as we hit it?
So look, I mean, we're already seeing the oil price going up. The funny thing is, Russian oil imports into the US is not actually all that much, from what I understand, or from what the statistics tell us. But still, it still has an impact. It has an impact on the price globally. And once US, I think it's more about once US puts a ban, other countries will follow suit, and that's where the problem starts. It's not
Hmm.
so much that US imports will create a problem because they don't import all that much, but it's that the other countries like the EU, specifically UK, a lot of the emerging markets as well, they are where the problem will, arise.
No, it makes sense. And tell me, Aisha, something like when you are seeing oil price and gas price, are you expecting them to behave slightly different or pretty much same in coordination with each other?
So obviously there's some coordination now. There's a difference between the gas that you get overseas versus the gas that you get in the US, right? It's not the same. There are two different types of. I mean, we can go into the nitty gritties of the types and various subsets, but it's not the same. So I think what gets impacted more is the price that goes into the EU. They are large consumers of gas, specifically for heating. So this winter was a difficult winter for them. I mean, they're still in sort of winter. They still need heat, unlike us here, who we already have the air conditioning on. But I think they might be able to get through this winter. But if they have to stop importing Russian gas, I think next winter is where we're going to see a problem. But you know better than I do that markets move faster than the impacts, especially when you talk about commodities. I mean, I don't think, as you started, right, as you pointed out in the beginning, that supplies haven't been disrupted as yet. yet the price is already going up. And you can see that in every commodity. It's not just oil. So if you look at the softs as well, it's not like wheat is out of market, but it's in anticipation of that, right?
That's true.
So you
That's true.
expect the futures prices to go up, and that's where the market lies now. It's you're eh, in what we call backwardation, right?
Yeah. So and let me explain. I think let me just share the futures for a minute just to explain like what uh, Aisha has just mentioned. So these are the futures for WTI. Okay, and you can see these are the April calendar month, and you can see the price of that contract at this point is 124.35. But as you would look the subsequent contract price, you would see that the price is actually decreasing. So when we have this kind of pattern in the futures, where the calendar months have like the nearest month has the highest price, and as you go further, the price is decreasing. This is what is called backwardation, and it creates a very unique dynamics on the ETFs, especially. You know how the ETFs work is the ETFs work like, for example, if I'm buying a USO, and though it has changed slightly since the oil has gone to zero, but this is how it works in a simpler way. That one month, I mean, USO will buy all the contracts. I mean, whatever money you invest in USO will buy the 124 and this contract. Then, and with each and every trading day, it will sell one by 20th 22nd portion of that and buy the another one. So you can see it is selling at 124 and it is buying at 120 for the same dollar. So in backwardation, ETF create this kind of time gain. Okay, in the contango there is a time decay. Okay, so all the ETFs that tracks the oil price, uh, yeah, they move in the same tandem, but there is this time delay or time decay, and the time gain actually creates a bit of dynamics, and it becomes quite critical, especially if you are in a very volatile environment. Very volatile means the prices between the two calendar month are differ by a lot. Okay, so that is something everyone should remember. And if you are playing with leverage ETFs like UCO and SCO, then whatever we are talking, I think that effect is even multiplied quite fine. So that means
Magnified.
the time decay and the time gain, if it is working in your favor or against you, I mean, it's so be very clear. Buying oil price and buying oil ETF, I mean, yeah, it's almost like that, but not entirely like that. Okay, so I hope that explain a bit of dynamics that Aisha was discussing. Aisha, what do you think? I mean, like I was looking at 124, and then I was looking January. It's already like 25% premium that has been in built at this particular point. That's quite a lot.
Yes, that's right. I mean, usually, even whether you have backwardation or you have contango, usually the prices are still quite flat, right? So you don't have such a steep curve. But what we're seeing now, at least I know for Brent, this is very true. The kind of premium that you're seeing now, or like the difference between your futures price and your current price, it's pretty steep. I think I read an article on Reuters which said it had reached the difference had reached about $15, which is huge. I mean,
Yeah,
these contracts usually front month contracts they trade at pretty flattish. So even when it goes to five, six, seven, people say that that's like quite a bit of a difference. And here it actually reached 15, which is pretty steep.
that is
So
true.
yeah, so I think that's another dynamic. I mean, we're seeing extreme movements and quite a lot of volatility for this reason, because you have extreme differences or spreads, as we call it. So you have more drastic oil price movements. If you look at price movements in general, they're not supposed to move so much. I mean, they
Yeah,
move, but not this much and not by this much, right? So it's quite interesting. And I think going forward, as long as we have all these geopolitical issues, I think we're just going to have more and more volatility. Not to mention what's happening in the macro environment as well. You have liquidity shrinking. You have the Fed freaking out about inflation. raising rates, possible QT, all of that. And yeah, no, this isn't going in the right direction for sure.
No, I agree, and I think this time actually we are going to see the actual impact of inflation because of energy. And I was seeing some of the slides this morning. I was preparing for some of my clients in bank.
Mm,
Yeah, it's already off the chart. I think it's going to be quite shocking when the data is released. So in short, guys, what you're trying to say that yes, I mean there's a lot of volatility in the market, but if you are trying to play around with this volatility, just be careful. I mean, this is a market that moves pretty fast. So for example, if you are trading in ETFs, and even if you have access to pre-market and after hours, but you still have windows where you cannot trade these ETFs. And these are the windows where people in OPEC are awake, and if they make a decision, yeah, you can't do anything. You just have to accept whatever comes your way, and it can. Yeah, I mean, I'm expecting few bankruptcies because these trades are so attractive that people will definitely jump at some point of time. But it is I've seen it several times. I mean, I have burnt my hands with oil, so this is not an easy thing to do because literally few things will drive. So that is on the part of ETF. Like, but in terms of like now we are talking, Aisha, and I had a chat with Tom Nash yesterday on this as well. People are saying the oil is going 130 and 140. In my view, is there is no ceiling because until and unless
you,
because this is inelastic. This is all speculation at this time, and the situation will keep on getting tight with time if somebody doesn't intervene in this situation. And right now we have not seen any intervention. I mean, in fact, the news you were seeing from the US was they want to ban the Russian oil as soon as today. And we
mm,
also heard that Russia wants to shut down the gas pipeline, which is Nord Stream, that runs from Russia to Ukraine. So to be honest, in my view, there is there is no ceiling at this point. If nobody solves it, it will keep on moving up. What do you think?
look, yeah, you're right. I mean, so it's all got to do with your spare capacity and supply side issues, right? I mean, people think this has got to do with demand, but it's not. It's about supply. Um, that's my view. So just for the record, everything I say is my view. Okay.
Yeah,
Um,
same with
so
me. It's our view, and I have a disclaimer right in the starting for that purpose.
okay, great. So yeah, so the funny thing about oil prices, at least this is how it works with OPEC and with the OPEC countries, is if they decrease production, oil prices go up, right? So this is normal. You restrict supply, oil prices go up. But if they also increase production too much, there's a chance that oil prices could go up. Why? It's because, like the spare capacity starts to decrease, right? Your
Yeah,
reserves, your because it's not that easy to take oil out of the ground. It takes yeah, exactly. So it takes a bit of time. There's a time lag. There's a lot of investments, and by the time those investments can actually be deployed, and the way it works is you don't deploy investments until you actually know that there's going to be a demand for it.
yeah,
So there's always a time lag between building up spare capacity and actually increasing production. So what happens is even if you increase production a lot, okay, there'll be a point where the price will start to come down, but then because you are depleting your spare capacity, your price will start to go up again. So it could it becomes almost like an impossible situation until and unless you know uh, the demand side and there's
supply
enough supplies in the yeah there's enough supplies in the market, but not as much as to deplete your spare capacity. So if you put too much pressure on one country, then this is you're going to have a lopsided market, and this is what's going to happen. You're going to actually see higher oil prices. So when people say that oil prices could go to 200 to 300, it could happen. I mean, you're right. There is no ceiling, and it could very well happen. Do we see it now? Honestly, I don't know. I mean, it's anyone's guess where the oil price reaches, who steps in, and what happens. Because it's not like someone can't. We know that my neighbors can very well step in and increase the oil supply, and will be okay. I mean, or at least somewhat okay. Oil
Yeah.
price doesn't have to go to 300, but we don't know when that happens or if that
So
happens.
yeah, my view is like that because if the oil price is going to go high, like 150, 200, it will happen all very fast. Because now we are in the territory that the oil prices, if they once they cross 150 and the crunch is the same, I think oil prices literally move like 15, $20 a day, maybe even $30 a day in this situation. So if it is happening fast, Saudi may like to hang on for a month just to give whole world the taste of it. Okay. The thing is like strategically thinking, there are two dynamics. The first is Saudi also do not want oil prices to be that high for sustained long period because then it makes a lot of inexpensive oil from other places who are importing oil from Saudi. So it kills the market from that point. But that is one. The another part is that Saudi also doesn't want to intervene too fast early as well because the relationship between the U.S. administration and the Saudis since the Biden government has come has been a bit frosty. So it's a strategic leverage at this particular point. And to be fair, uh, Biden administration, at least in terms of what the public news says, they have not yet approached or made a statement to reach to OPEC or Saudi that much either. So the biggest bargaining chip that can help to reduce the oil price is kind of off the table for now.
Yeah. See, I'm not going to get into the politics of these things, but I'll tell you what's realistic. The conversations that they're having right now around oil, Iran releasing oil, or Venezuela releasing oil, or the US buying from Iran and Venezuela, I don't think this is realistic. Um,
I agree.
for the simple, yeah, for the simple reason, okay, there are two sides to this. One, the quality of oil. So Iran and Venezuela, especially Iran, I'm not very in tune with Venezuela, but I can tell you about Iran. So it costs over $300 for Iran to produce a barrel of oil, which is huge. Okay, if you compare that to the UAE, that's like UAE is about 40, maybe 60, let's say. It depends which statistic you're looking at, but either way, $300 is over. $300 is huge. um, Given everything that's happened in the last 20, 30 years, Iran hasn't put in the investment that they should have to actually extract the right kind of oil or to have high quality oil. Okay, so you have oil there but with a lot of impurities which can't be used for various things. I mean, you can't. It's not all the same, right? Not
No,
all oil is the same.
no, it is not.
Yeah.
And I think
So
everyone just have to understand also that Iran has a lot of sanctions there, so they cannot access to a lot of
yes,
companies and technologies that
yes,
can help them to produce a lot of this oil at a cheaper
yes,
price also. I mean, there's
yes.
people, Saudi has a lot of engineers, expatriates of literally every company of the world. Iran doesn't have that. Okay, so that's a constraint. Same with Venezuela as well.
Yes. And I think the other thing, if you want to look at not the political factor but the financial factor, you spoke about sanctions, right? So Iran has had sanctions on them like for the last 20 years. I mean, at least since I started banking, sanctions started getting worse and worse and worse, right? So they have all these frozen assets all over the world. They've been denied access to funds all over the world. They don't have banking systems, channels. It's a horrible situation. So Biden's going to have to release all of this. Um, and who says that removing these sanctions will survive his presidency, right? So Iran will need assurances to that Biden can remove these sanctions and make sure that these sanctions stay removed, maybe for the next 7, 8, 10 years, because whatever damage has been done to them in the last 20 years is not going to be reversed in a year or even two. It's going to take a long, long time. So them agreeing to this is not going to be so easy. So striking a deal with Iran is going to take it's going to take a lot more negotiation, I think, than most people think. Um,
I agree.
it's not that easy. So your best bet is the Saudi or the UAE. Now, even if you look at the other OPEC countries, I'm sure you know this better than me. Uh, Production in the other OPEC countries have also been very iffy. Okay,
It is
uh,
iffy, and even if they want to add, they cannot add because they have been trying to add. That's the situation has been.
absolutely.
I was there in Nigeria. I mean, see, people, despite quota, these companies have tried to build capacity to add more, but they cannot add more to fill the Russian oil at this particular point. That's the ground reality. If Saudi doesn't enter, yeah, I think that's pretty much spiral. Prices will go up. Even every country of the world step in. But if Saudi doesn't step, in case of Russian oil is taken from the market in near term, there is no protection for oil price. Oil price will shoot.
Yeah, absolutely. So I think Saudi has been looking to increase their oil production, obviously, but they've set a target for somewhere around 2027. I'm not sure if you heard this. I read somewhere, I can't remember where I read it, but they have a target for 2027 to increase their oil production. UAE, I know, is looking at 2030 to have 5 million barrels a year production. So yeah, that's basically too long. I mean, that's too far away. We need it now. But I don't think they can step up the production immediately. And
No,
if you look at Oman, Kuwait, Bahrain, they
no, they
just can't.
cannot. I mean, even like each and every country, even if they try to add as much as possible, without Saudi, this is not happening. Okay,
Yeah,
and I agree with you. Like Iran could be a good midterm solution or a long-term solution. Okay, if they sort out their nuclear deal issues with them, but it
yeah,
is not going to help in April, May, June. That's not happening. Venezuela, its situation is even worse because Venezuela oil is high API, so it's a very thick oil. Okay,
okay,
I mean, like,
okay.
sorry, when I say high API, it's a low API oil. I mean, like, how do you not say, like, it's a very thick, it's a
The
tar oil.
viscosity is, yeah, the viscosity is very,
Viscosity
yeah,
is very
low.
high. Okay,
High
so you
or low?
cannot, it's very low. Sorry, it's
Okay,
very thick. I mean, its viscosity is
yeah,
very high. So what
yeah,
happens?
okay.
It flows very difficult. It's a special kind of a treatment in the refinery. I mean, refinery has to be tuned to it. Same thing with Venezuela. It's been there is a lot of people have left country, so there is lack of manpower. There is lack of technology. So same thing with Venezuela. That even if USA make Iran and Venezuela untouchable or touchable for them for the time being, they will not able to help in a month of 1 month, 2 months, 3 months. So
Hmm.
yeah, I mean, this is not a protection for oil price at this particular time. Okay, same thing. I mean, if I look for the gas part, is that if Russia stops the gas supply to EU, there is no replacement in near term. I mean, yeah, it will take a while, and there will be harakiri everywhere. People will try to move as much LNG, but there is no near term respite. So people like it or don't like it. Yeah, I mean, for a week or two, you can play the tantrums with Russia and everyone together. But in near term, getting away from Russian gas and oil is not possible without making oil to shoot. And it's not just like the oil to shoot. Like for example, if Russia is off, sorry, if Europe is off Russian gas, it's not just the price. The industries will shut down. It's the GDP. People will be out of job. I mean, the
Yeah.
energy prices will be high. There will be power outages. And these are the kind of circumstances Europe has not seen since World War II. if I'm right. I mean, at this scale, if they put themselves in that kind of situation, so I don't think any politician has courage to take that kind of drastic measure, especially given what they have done with their energy policies. Because today Europe is in this situation because of whatever energy policy decisions has been taken in last 5-10 years. So I don't see that happening in Europe either. I mean, US can play ball, uh, but yeah, I mean, Europe literally doesn't have any stake in this game to play ball here. This is my view, Ashok. Do you think it's reasonable?
No, you're absolutely right because I mean, where gas is concerned, natural gas, um, from what I understand, they're just very limited supplies. I mean, most people think that OPEC has a lot of natural gas, but we actually don't. Even the UAE, we have oil, but we don't have gas. I mean, we have gas. We have the wrong kind of gas. We have gas with a
Yeah.
lot of sulfur in it, and you can't use that gas, right? And in fact, we are net importers of gas still.
I
We
know. I
plan to
remember.
be Yeah, we
I
plan to be self-sufficient, I think, as well by 2030, but we're still importers of gas. And don't forget, all the power plants in this region all run on natural gas, right?
yeah.
So, and we don't have water. So it's not just, we need the gas for the power plants and the desalination. So when you look at the gas supply, we are still dependent on Qatar. I think Qatar has sizable reserves, obviously, but I don't think they have enough to supply to Europe.
So they don't. They are
Mhm.
short on capacity. They have reserves, but their capacity is constrained here. Iran has a lot of reserves, but Iran capacity is not available because a lot of these reserves have not been developed. And in a lot of other gas reserves in Middle East in general, like I mean, developing gas was never considered sexy in Middle East. That was one challenge. And I remember like there was a time when Kuwait, even for the electricity, they were using oil. So for them,
Mm,
there's I think this project is still going on, like Kuwait Gas, which is like they have to first ensure that all the electricity in country is produced using gas. Like if
yes.
people are thinking about like green transition, I think for them the transition was that first let's ensure that gas is being used. So there was challenge in having enough gas despite being having very large reserves to support internally. So suddenly for them to produce the Russian gas deficit in
No,
Europe, yeah, it's not happening. I mean, I don't
no,
see.
it's not happening. I was actually working on a project for Oman as well, and Oman has a lot of gas, by the way. Um, but they don't export any of the gas. So the way the financing is set up, they sell all the oil overseas, Oman Export Blend, but none of the gas is sold overseas. So all the gas is consumed in the country.
Hmm.
And I think that would be the case. At least Oman is more or less self-sufficient. They do buy some gas from Qatar, I know that, but not a lot. UAE still buys quite a lot. Saudi, I'm not so sure. I think Saudi also buys some, but not that much. But I think UAE is the most dependent on Qatar gas right now.
So just to summarize the Middle East story, then that even though US is trying to get oil from Venezuela and Iran, we do not see a very high likelihood that it can help in short-term price if market goes in shock. And as far as Europe is concerned, which needs gas replacement for Russian gas, even if Middle East want, they cannot help. I mean, Saudi can help to release pressure on oil, but as far as gas is concerned, literally no one can help Europe if Russia shut down. Of course, Russia will suffer also because it harms their own revenue as well. But that's the reality. So let's move our view now towards to what's going on in US. I mean, of course, US is one of the large producer. Of course, it's an importer now, but it can up a lot of gas, at least the oil production from shale oil. It also has neighbors, Mexico and Canada, that they can also do. But what's happening in US? I mean, the policies are actually killing the oil in a very premature way. Do you think so?
Um, okay, just to give you a disclaimer, I'm not that caught up with the US oil situation. But yes, what I understand is cutting off these pipelines and stopping the drilling. This has set them back for sure. And now, even if they want to start, the drilling, they can. It goes back to the same thing. They can't do it immediately, right? I mean, you've been in the oil and gas sector for a long time. Exploration, production, from finding to exploration to production, it's a long process. It doesn't
Yeah.
happen overnight. So even if it's not like they can turn on the taps. Saudi can, they cannot.
No, they
It's
cannot.
as simple as that.
Somebody who's putting
So
money, he also wants to ensure that there is significant return. That means he needs guarantee that this production will not be shut down 3 months down the line. So that
yes,
is another challenge with the. So US has a lot of potential, but again, the way the policy is working and the infrastructure constraints are there, in short term, even US cannot help itself, despite having all the reserves. And all, I mean, the Canada has a lot of reserves as well, but that is a challenge that just cannot be ignored. But one thing is for sure that US literally has to think seriously what they are going to do in long term, because this situation might resolve now, but it will not go away completely. So there is a lot of push on the green energy, and I'm all up for green energy. I mean, my career is now moved towards helping companies to move towards green energy, but I'm also a realist, and the realist point, a part of me says it very clearly that the you need to ensure energy supply during the transition. Okay,
yeah.
this euphoria and this cheerleading kind of effort. I mean, it feels pretty good if you are on an election run and you say we are going green. Yeah, I mean, it gets the vote and everything, but if you say it, you need to deliver it also. Okay, it doesn't mean that in order to deliver, you make people suffer unnecessary because you made something which was premature. So at this
Yeah.
particular point, I think the when I see the situation in US and Canada, my view is, yeah, I think it's not being planned well, and these people have got themselves in a situation where, uh, yeah, where they are going to look very bad if they go back to oil, and if they don't go back to oil, then they make people suffer. So it's a catch-22 for them. Okay, and now they're trying to distract things by going to Iran, going to Venezuela to show that we are trying to do it. It's not something we have brought on ourselves. But in my view, they have brought it on themselves. I mean, why you need somebody else if you can help yourself and then try to move towards transition? They haven't done it. So I treat these tactics more as a distraction. These tactics will not going to help avoid oil shock if US decides to ban the Russian oil.
No, absolutely. I think in terms of green energy, I absolutely agree that we need to start somewhere. But then, as you said, we need to be practical, right? And I think a lot of people are saying, oh, this oil price going to 150 is going to create demand destruction. Honestly, no. I don't think it's going to create demand destruction. It cannot,
No,
right? We're still too reliant on oil for it to create demand destruction. Yeah, it'll make people think twice, sure. But then we're already thinking about that. We're already thinking about replacing oil. Will it speed things up? Possibly, but not as much as it should, right? As soon as things start to normalize and the oil price starts to come down, people are going to forget about all of it. So while it might help open people's eyes to things, a you don't have the technology yet to substitute oil, and b it's not going to create demand destruction just yet. It's just oil is too prevalent. We use it too much. We're too reliant. It's just not going to happen. So it's great that you start on something, but then you can't stop what's existing and say that we're just going to go green with everything. It's not going to happen so easily. I mean, it should be a smooth transition versus let's cut off the pipelines and then go green.
no, I agree. I mean, it cannot be premature. And again, like, it's not only the technology. There are some key engineering questions that needs to be answered, and technology has to be deployed at a scale, which
Yeah.
has nobody has done it. So there is not enough people. There is not enough technology. So this is why I say, I mean, the euphoria, the war is not won until it is won. I mean, you will not. go for climate transition, that you say that it is done until it is done. So we
Yeah.
have just started our steps on that part. If people start cheerleading and jumping and claiming victory at this particular point, yeah, I think we are going to see a $350 oil very soon.
Yeah, that won't be good.
So I have one more question now, and this one is like a bit critical one. And because now, like I discussed earlier in the part, like if I go to Europe, and like we discussed, like I mean, oil and gas is quite a complex thing. There are so many things are happening together. So in order to add capacity from one place, yeah, you really need to get a lot of things done. A lot of time people think that what you can do is you can just dump a lot of money and that can give you oil. I mean, it doesn't work that well also at times. I mean, like for this particular time, this is what is happening. People are putting a lot of money, but if we go into supply crunch, if there is no oil, there is no oil. I mean, that's the situation. So
It's not if, Sachin. It's not if. We're in a
at this
supply
point,
crunch.
I mean, at this point, yeah, I mean, it's not if, it's that's where we are moving. So
Yeah.
if situation is not resolved, Aisha, like for example, US people still end up paying high oil, but they can still pay. I mean, that's the idea. US can get a preferential supplies from Canada, Mexico. They can use as much of internally. People will pay a lot of expensive oil, but they will pay. But what will Europe does? I mean, Europe, like I said, they don't have solution. They don't have gas if Russia is not supplying gas to them. I mean, Russian gas is not there. That is a shutdown now in different part of industry. Uh, do you think Europe has thought it through and are they prepared for it?
See, I don't know. I mean, look, I honestly don't know. But I do think you could substitute some of that with oil. But then you're paying a lot more, and much of the technology, at least for power plants, are not supposed to be run on oil, right? So if you run them
Right.
on oil, I mean, you can run them on oil. Backup fuel is always oil, but almost always. But the problem is, if you run them for too long, it tends to destroy the
Then
machinery,
sure,
right?
maintenance and everything. I mean, the expense also increase. And I think the bigger challenge I see in Europe is that even if they want, they have, I mean, they have celebrated green energy so long and so much, even before they achieved it. It's too, I mean, yeah, their ego is too big to go back. I mean, these are politicians. I mean, they are not like simple people who will think practically at times also. For them, it's just something that they just cannot do. They will let people suffer for it.
So I think Europe is still a little bit ahead of most other people in terms of green technology and solar panels, wind energy, and carbon capture technology as well. I think they have some clean coal technology, if I'm not mistaken. So there's some of that, and so it won't be like a total shutdown, right? But they'll suffer.
It will
They
be a
will.
shock to at least some places. I mean, they have
Yes.
done a lot of offshore wind. I agree. I mean, they have done got some solar. They have, at least in France, they have nuclear. But the energy deficit, I mean, at least I think Germany will be quite bad when if it happens because the reliance they have on Russian gas is just a lot. Hungary, I was reading this morning. I was looking some of the data. I realized that the industry is already struggling there
Yeah.
with the lack of gas, and the fertilizer industry is struggling a lot because of that. So the industry
Yeah.
part is to me weak. So in short, my understanding is that if politicians don't talk with each other across the aisle and boundaries, and they don't figure out how to get the ceasefire, okay, and how to ensure that the Russian oil and gas stay in the market, I don't see there is any way we can stop the rise of oil price. I think we are here for the ride of our life.
No, you're right, and I think this will have dire repercussions. As you rightly pointed out, it's just these economies have been through a lot already. They're not exactly very, very, very strong.
Yeah.
Um, so they're already in trouble. They've already got raging inflation, even without oil prices being so high. So your inflation data is what we see from like a month ago, 2 months ago, right? And that's already up before the oil price reached this level. What happens in the next few months? And as much as people would like to think that, uh, I mean, I was listening to someone saying that, oh, in 2008 things were different. People had a lot more debt, and there was a lot more, the economy was weaker. So when the oil price went up, it was a worse shock. But I don't think that's uh, altogether true. I think the economy is still pretty fragile, both in the European Union and as well the US. I don't think they're as strong as people are making it out to be. I think um, I mean, the US has inflation already at over 7%, right? This is crazy. And
See,
if they say that the debt levels are lower, household debt is not. It's not
no, it is.
actually.
The household
Um,
debt, the credit card debt, I mean, the student debt, it's quite
yes,
in stick, quite in
housing,
soup.
housing debt has gone
Housing,
up like anything. Yeah. So I mean, we've seen asset bubbles. We're seeing um, price inflation, asset inflation. So it's not as rosy, or it. I don't think that they can withstand the shock. I don't think so. So these price levels of oil. So if you're talking about 200 plus, I don't think it's sustainable. Something has to happen, because this shock is going to be terrible for not just for the European Union, but the US and across the world. Do you think, our countries are any better? I mean, the
no,
UAE
and
probably is okay, but India, Bangladesh, we're not going to be okay.
no, it's actually it's even worse because, like, for example, I know that India is like importing 84% of their oil. Their whole budget will be thrown out of window. I mean, even China is not safe. I've
No.
prepared some slides for some of my clients this morning. So this is what I shared with them, Aisha. I mean, these people, I need to make them understand like what's going on. So I mentioned that at this particular point, when oil price shock, yeah, if OPEC is not entering, and especially Saudi, there is no near-term respite. I do not agree with literally anyone on this part. Is that I do not see any way out that you get
Mm,
away from Russian oil and you can yet maintain without help of Saudi. I mean, I have tried to run all scenarios in my head. This scenario is just, I mean, you need Russian oil or you need Saudi oil, unless there is no way stopping oil price at this moment. I mean, commodity and asset crunch, we have already seen wheat, nickel, aluminum, steel, palladium, thermal coal. I mean, because of that, also the requirement of safe haven like gold and USD that is also hot. Also because of economic sanctions, and only crypto is also kind of getting a lot of favor. And like I said, the oil companies are getting a lot of money at this point, so they are ensuring that when they move from big oil to big energy, which technologies and which scenarios, they have a better narrative. I mean, and this is I'm just showing some of the inflation data, and this inflation data is still not incorporating February and March, which has to show the shock of the oil. But you can see, I mean, inflation, even I thought it was transitory, let me be honest. And the supply chain bottlenecks were pretty bad. And I will show in a minute why they were pretty bad. Okay, let me just go directly to the slide. So this is the supply chain bottlenecks in the last year in 2021. And you can see it was all red. And this was
yep.
January. This is before the war has broken. Now the war has broken, the oil has gone. I mean, several ports are out. The Russian are out of the cargo business for the time being. So you can imagine what kind of supply chain bottlenecks are going to be. I mean, for the same chart, if I'm going to plot it back in for the month of February and March. I mean, I was looking at the interest rate in terms of Fed tool watch. I mean, the idea is that Fed still has to do some sort of ceremonial rate. The expectation it is going to be around 50 basis point. I think Mayhem was sharing the same data after like 2 hours. I finished this probability was already 94%, so market has to take a shock of that as well. Okay, now this is
But
one of the most
it's
interesting.
still 25 basis points. Yes, that's what it's
Uh,
seeing. You can see.
so
What does it say?
the probability of between 25 to 50 like is high, is like
Yeah, so that's an increase of 25 basis points basically.
yeah. So I mean, market is expecting that probably they'll do like two layers of 25 basis point straight away. I mean, let's see. Now this is one of the most interesting chart I want everyone to see. Now this is the inflation data uh, of different countries, starting from Japan, France, Italy, and this is food and other stuff outside energy. And you can see that US is very high compared to every other place. Now, on the same inflation data, you can see there is a clear trend that is going from Japan to US. Okay. Now,
Hmm.
if I use the same data and I add energy data on top of it, now you will see
Oh,
picture is very different. So you see, this is star that has come here. That star is energy. Okay, and you
wow.
see all that, whatever trend you were looking, that trend is entirely gone, but the energy will completely overpower. So, guys, I'm just giving you some of the first glimpse that what inflation will look like when the next reports are released. Okay, so yeah, it's going to look extremely bad. Okay, there is no respite on that. And before even that, I mean, like the inflation was already kicking up in until December, both in Europe as well as in US. So yeah, I mean, this is pretty bad. And oil price has been volatile for a very long time, but going from zero to what we are seeing, $130, and not zero. I mean, I'm saying zero, but practically it went to -$37. So that kind of range, um, yeah, it's unheard of. Even
Yeah.
people like us who spend more than 2 decades. So in short, what I'm
And
trying to say
and
is,
don't forget, Sachin, we're still not at pre-pandemic levels, by the way, for demand. Okay.
I agree.
Yeah. So the last oil report I was seeing from OPEC, we're still about 90-ish, maybe even a little bit below. So we're still not at 2019 levels. So once the economy, I mean, what's happening in Europe is happening, but other countries will begin to open, right? And once that happens, you're gonna have oil, I mean, oil demand from across the world. So that's gonna create a lot of pressure as well.
No, I agree. So let me just my views, and Claude is saying about Saudi. I mean, like I said, there is no scenario that we can survive this without Saudi and without Russian oil. Okay, and Russian oil is likely to be taken off. And I agree. I mean, it seems a quite a fair bet that Saudi will open the tab, but I assure you, Saudi will not open the tab until and unless they make everyone suffer for a while. Okay, because the U.S. administration has not been very friendly with them. Okay, and see, it's not like for them just to decide and open it. They need to take their stakeholders and their partners also in some
Exactly.
consideration.
No,
It's not like just,
exactly.
I mean, they have a Saudi has a clout and power in OPEC, but I mean Saudis they also understand that they cannot act rash within the because that's a cartel they have been managing for years. So they if you respect members, members respect you, and that's very important. So yes, Saudi will open taps at some point of time. I do believe so. Okay, but it will not happen in the initial shock. I'm also reasonable certain of that as well because the way I'm reading things, until and unless there is a off table negotiation and discussion between US and Saudi, okay, on terms and condition, it is not happening. And the way US has already sent people to Venezuela and Iran, they're already trying to create a pressure on that. I think yeah, Saudi is in this game for far longer than uh, than the
You
current
know, I,
administration.
I I also believe this will not bode well with the Saudis. The fact that they are also going to Iran and they're going to Venezuela. Um, and I think this is just my comments. But I think the fact that they haven't asked the Saudis and gone to the, they're hoping that these other countries could do something. I don't think that would be, that would be very, I mean, the Saudis won't be very happy with that.
No, they are. So that's what it's like, that they are trying. These are like tactics people are playing. I mean, see, people need to come to the table, discuss it, sort their difference, and figure it out. People are playing these kind of games right now, creating leverage and all that. And I think it's important that people agree that the amount they are looking and the time they are looking, there are only one or two countries that can do. So forget everything, talk to that, find a strategic solution, but we are wasting time on it. Now, there's a question from Rolzam and he's asking that what if Russia decide not to give oil? See, Russia can decide that. Okay, like they're already saying that the gas cut they want to do for Europe. The problem with Russia is like if they do it for a day or for a week, that is okay. I think they can. But if they kind of stick with it, yeah, they will lose the market then in the long term. Okay, so Russia, I mean, they can create pain, but if they want to create sustained pain, then they will be out of market also. That is challenge that Russia also has, and also I mean this is practically the only source of income that Russia is getting. So Russia has to be very careful also. And my understanding is that apart from a small shock, Russia will not or Russia should not discontinue because it will hurt them quite a bad in a long term. To be honest, they're not big in the world economy as per in GDP. The three bargaining chip Russia has is the veto in the UNSC, is the nukes, and is the dependence of Western countries on their oil and gas. If you leave one of them, it could be a big strategic miscalculation in longer term, in my opinion.
Yeah, I
So
think it's a question of, who blinks first, right?
yeah,
Um, so fine, Russia can always say that I'll give you oil on my terms, and the other people or the EU has doesn't have to, take it on their terms. But I think Russia also has one outlet to sell their oil, and that is China. Um, I don't think China is going to stop buying oil from Russia, whatever the situation might be. They're still buying, and I think they'll continue to buy. So I think everybody else stands to lose more than Russia. Sure, the
I
prices will
agree.
come down for them, but I think everybody else stands to lose a lot more.
I agree. And I think in all the scenarios I play, I think there is one clear winner in all of this is China. See, because if you see in terms of geopolitical power, I mean, if Russia gets weakened or Europe gets weakened or Western, I mean, US lose their leverage over OPEC or over Russia, I mean, all scenarios are in favor of China. It also allows
Sure.
China preferential access to the metal that Russia exports as well as the oil. Okay, I mean, China has been pretty smart in terms of how they manage and circumvent some of the sanctions around it. China is also very clear that the West is more dependent on them than any other place. Okay, so they can play a bit of ball as well. So, yeah, I mean, to me, whichever way I'm going to look at it, China is already a winner in this scenario.
No, absolutely. I think China is happily, gaining from the spoils of war, let's say. So they're happy to be, diplomatic with everybody, and they're getting what they want. Um, so yeah, I think this you're right. The situation needs to be resolved sooner rather than later. Otherwise, we're going to be in trouble.
I agree, and I agree with Claudia on this. And see, Venezuela production at this particular point is more a paper. What do I call like a it's a rattlesnake without teeth. That means it
Yeah.
can create noise, but it cannot actually bite you. Okay. I mean, because first it doesn't have technology, fields have not been developed. It's a very thick oil. Okay, so refineries are not. I mean, they just cannot accept it without fine tuning and reconfiguring to it. Okay, the yield is low. The country is still under sanction. And what do you say to everyone? Like suddenly Maduro is okay, and you can touch Maduro because a few days back you were saying that you want to put more sanction. And so, what is this theory? It's like a revolving chair now. That today Maduro is touchable, then tomorrow Putin will again be touchable. It's not about like sorting thing. There is no there. I don't see there is a very systematic foreign policy thing here. It's like people are playing cards and figuring it out like which card to play next.
Because there's an element of desperation now, right? Um, People are scared. I mean, I don't think anyone realized what would happen. I mean, Putin was threatening for the longest time, but they never thought that he would actually enter another country. Start a war. He started a war. Who does that? So without aggression, I mean, so it's just I think people are lost, and now desperation has set in. So I think they're looking at various uh, avenues to sort things. It's just that.
I agree. See, my view is like, and this is why I think Russia, when they went into this kind of deadlock for war scenario, is that they thought that that Europe will budge. Europe thought that Russia is bluffing, and Russia thought that Europe is bluffing, but
Yeah,
Russia was more prepared or determined to go a step further, and this is how they ended up in this war. And now, I mean, it's a game of like who will budge first.
absolutely.
So one thing which is so oil, we have seen what's going on in oil, and like I said, there is no respite without OPEC. There is whatever countries say they need to make significant change in terms of policy in their domestic supply. Okay, they like it, they don't like it. If they don't do it, we are not moving to energy transition as early as we want. You need to ensure that energy supplies are less volatile, unless people will go into fear, and they, if narrative is like this that we are suffering because of green energy becomes unpopular. And as far as Europe is considered, yeah, I think they just need to figure it out in long term how to move away from Russian gas, because this problem will come back to them. Now, this is one part, but then what is happening in wheat, what is happening in nickel, palladium, aluminium, steel, gold, USD, cryptos, and these all these assets are going up. I mean, this is not a good sign for supply chain and for inflation. What do you think, Aisha?
No, not at all. I mean, what strikes me as worst is that, basic necessities are going up, right? You have your bread
Yeah.
basket trade that's going up. And this is actually very scary because, on the one hand, okay, I mean, what you going to do? Not eat? It's not going to happen that way. So as much as the metals and all of this is important, but what scares me more is wheat and corn and um, soybean and all these prices going up. Is that's the basic that everybody needs. And if people have to pay double, triple for just the basic, what are they going to do?
No, I agree. I mean, so this is what concerned me, because you remember, like I showed you how the supply chains were even before the
Yes,
war and sanctions
yes,
came in place.
yes.
So this was pretty bad, and then now this is happening. So when I put these things together, I mean, I see that it's likely the start of a sustained high prices for foreseeable future, because of already. So I mean, this has actually created the inflation challenge quite big than everybody was prepared for. Let me take this question from Rosen. Can the West survive on other oil sources, Nigeria, South America? See, in theory, they can, but these sources can add oil over a period of 1 year, 2 year, 3 years, 5 years. Okay, and as you have seen that the oil prices are moving from 76 to 130 in almost like no time in this year. So you can see that 1 year, 2 year, 5 year is something that will not practically help in today's. And if the damage is quite big, yeah, I think some of this damage is irreparable also. So in short, can the West survive on other oil sources in the current crisis? The answer is no, in the current timeline. Okay, Aisha, do you think it's reasonable assumption?
No, no, absolutely, absolutely. So I think when you talk about Nigeria and South America, well, at least Nigeria, I know, they've been struggling to keep up with their own quotas, um,
Yeah,
and this is even before any of this has happened, right? So
yeah,
it will be very, very difficult for them to squeeze out extra production, let's say. um, Technically, the West can survive, but it's whether the supply can come in fast enough. And as
yeah.
you said, it cannot. That's where the problem lies.
Yeah. So, I mean, in short, like when we are saying like surviving in this condition, I think it is important to say that when we say surviving, we are trying to say that surviving in this situation means that you can actually avoid the scenario where the world get to see $100 or sorry, $200 oil. So that it cannot avoid that. So survival in that sense is not possible. Okay, so what can American consumers do to mitigate the effect on themselves to price shoot to $300? To be honest, they can't do much because Americans will not stop consuming oil. Okay, I mean, America is one of the biggest oil guzzler in the world, so expecting them to suddenly reduce the oil, they cannot replace in a short term with electric vehicles because electric vehicle supply or the production capacity in US it's pretty good, but it's not that great. I mean, also because the companies are starting late, at least the incumbents on that part, and the renewable is not as big in the US still as in some countries in Europe. I mean, offshore wind is just starting, so they
Yeah.
are caught in this. I mean, they can get a lot of oil from Alberta if the. I mean, they can also get some oil from Mexico, but see, the oil price is global, so they can get this oil, but this oil price will come at an expense. I mean, they can US can always use this leverage to connect with companies that okay, when the world is short of oil, you supply oil to US and you get this in return. So they will get oil at the end of the day, but they will get a very expensive oil, and that's the challenge. Probably is also USA making some pressure on Russia by approach Venezuela. I hope so. I mean, what they are trying, but I think if you are in the oil business, you know that going to Venezuela is is a loser's game at this particular point. I mean,
Yeah.
I don't
So I
know.
mean, if you
Yeah.
and if you and I know this, I'm pretty sure the Russians know this as well. They
Yeah.
know that they're the only option here.
I mean, if you have been in oil and gas with some experience, you know that going to Venezuela is, yeah, I mean, it's practically inactive. I mean, it doesn't change any any piece on the chess in a short term.
Yeah. No, I think the only thing that can hit the Russians right now is Saudi.
Yeah. See, that's what I said. It's when you are looking for, see, US, Saudi, and Russia. They are the three bigger oil producers. Okay, and you can balance with each other, but
Yeah.
US is already consuming what it has, and it needs more, and world needs more as well. So this is where the challenge at this particular time is. So I do not see. I mean, this is why I'm trying to say that this is why market is spooked because people who are trading oil they understand this dynamic. That is why, see, there is no supply crunch at this point, as we discussed in the early part. It will come in the coming days, but this is why market has spooked because people realize that there is only one or two ways out of the situation, and the way politics is working at this point, it will not happen straight away, and that's why market has shot and market will keep shooting until and unless there is an outside intervention.
No, absolutely. If I can add a little bit on the financing side. So basically, for the last couple of years, the way that they've been hedging to the downside, right? So, but what we're
Oh yeah.
seeing now in the market is, looking at the net long side. So basically, they're using collars, and there is very little downside hedging because um, they're all like the swaps are just not there, and that's
Hmm.
basically because they all think that the price is going up, And if you look at what's happening with traders, I posted something today on Twitter as well. People are buying calls for $300, $150, $200. So people, the traders, the hedgers, the commercial hedgers, the producers, everybody thinks oil price is going higher. So they're all looking to the long side and all looking for higher oil prices. So that's what's happening on the financing side. Nobody's even thinking that oil will come down anytime soon.
No, it's same. I mean, I can tell you, like in the industry operation side of time, and people who are working in the strategy side also, at this point, people are seeing very little scenario without intervention that oil is moving back. And even like intervention happened, oil comes back. Guys, you need to understand like what is oil coming back in the situation right now is getting oil to 90, $95. It's not getting
Yes,
oil to $60. So for the timing, let's just forget the $60 oil. Right now, the everybody is trying how can we get oil to 90.95 first. Okay, and that 90.95 needs intervention from OPEC, predominantly Saudi. The Venezuelan and the Iranian oil may not be. Iranian will still helps up to some extent, but Venezuela, yeah, I think that's not happening, in my opinion. That's like a
yeah.
dip in
So
the ocean.
the average cost, I mean, other than Saudi and the UAE is like the lowest in the world. But other than UAE and Saudi, um, you need oil to be above 70, $75 a barrel for the cost to pan out. So I
Yeah.
don't think even OPEC Plus wants the price of oil to come below or to go below like 70, $75 a barrel. They would rather
So
keep it above that.
So there is the way oil price, I mean, the oil costs work in OPEC country. It's a bit of dynamics also. So dynamics works like following. So they need first there is the production cost, the cost that works, but then they finance everything from oil money. So they
Mm.
need oil price at a certain level to break even their budget. So the way we look for
That's
the
correct.
oil price in OPEC country is that what is the oil price at which they break even their budget? That means their budgets are not running in deficit. So we
That's
know that
correct.
Saudi is one of the cheapest producing oil, but since a lot of activities in Saudi is financed um, by oil money, so when you look like for the amount of like you see the tax that Saudi Aramco pays to government is pretty high. I mean it's like 93% royalty. So from that part, I mean the balancing is when you see that the OPEC countries need oil to be likely in a 75 $80 range to have a easy life in a way. Okay. Uh, so yeah, I mean they would so they have all the incentive, and for OPEC it makes a lot of sense to maintain oil between 60 to $90 range so that they are in a healthy situation. Their budgets are okay, but right now
Yeah,
they
I
are in
mean,
a
so even us, we're so low, but we're still like for the budget, we're at 62, I think, per barrel,
yeah.
and we're the
So this is
lowest.
yeah, and so this is why because and the reason for that to be lowest in terms of like because UAE economy is more diversified than a lot of other OPEC countries.
Yes, that's true. I mean, we only have oil really in Abu Dhabi, and the
Yeah.
rest of it is so. For example, Dubai ran out of oil a long time ago. We have nothing to do with oil actually in Dubai.
I know. I mean, Dubai is now financial services and residential hubs.
Yeah, we have all the oil companies, but not the oil.
Yeah. I mean, I can imagine. I mean, I still had some of my best times in Dubai and Abu Dhabi. Yeah, I mean, if you know oil and gas, that's a different place to be.
Oh yeah, for sure. So which means that you should come to visit very soon.
At this point, I mean, I should be able to
Not
visit
in
some of the.
summer. Not in summer.
I hope that's not in my control. But like one thing I want to also share, I think because this is also important, is that and I have said it earlier also because see we are in this situation because there was a lot of this cheerleading effort that was happening in renewables. So yeah, renewables are coming, everything is fine, and people went overboard for this, and now they will have to pay oil in the meantime when this is happening. The second part is Now the big oil in this whole last 2 3 years has decided to go into big energy. I mean, Saudi is saying they want to be the biggest hydrogen producers. I mean, the Exxon wants to be the biggest CCUS company. So what is going to happen now is that these companies are actually going to decide that what's the narrative of low carbon and zero carbon will look like. Okay, and people like it, people don't like, because a lot of people were waiting the oil companies to die. Guys, that's not happening.
No, no.
Okay,
No,
I
no. I mean,
mean
look,
this.
people like Total and NG and all these people have also already decided, right? Even before like the US companies. So the super oil majors, other than the US producers, I think the rest of them have Shell, BP, Total. They've all decided to go net zero, right?
Yeah.
And soon, if I'm not mistaken, by 2030, um, or earlier maybe. I can't remember the
I
date,
think it
but
will
anyway,
take 2050 in most. They will get 50% reduction, a lot of these companies by 2030. But the answer at the end of the day is, guys, I think this is not a time to fight versus us versus them. If we are going to make transition, we are going to make transition together. So, and these companies are going to play far larger role because this is how the dynamics are working. And if we don't intervene or we don't get intervention in oil, and for whatever reason Russia shut down their gas to Europe, yeah, I think we are going to see an event of our lifetime. That's how I see it.
yeah, interesting times. I mean, not the best of times, but certainly interesting.
Yeah. Aisha, there is anything else you want to pick up? Because if there are no further comments, then we can summarize discussion from our side, and then we can call it a day. And what do you
No,
think?
I'm
Like
good.
the final words, you wanna put any word of caution for people who are trying to play oil?
Um, Look, I think one thing if you're buying stocks, I mean, you already explained the ETF factor, but I think if you're buying stocks, oil stocks or oil companies, I think one thing to remember is there will be a divergence at some point, where the share price of oil companies will not follow the oil price. So the oil price could keep going higher, but that will not translate into higher share prices for the oil companies. So just bear that in mind that if you're thinking about buying companies as a substitute for oil itself, it will work up to a certain point, and then there will be a divergence between the price of the shares and actual oil. So yeah, that's
Right.
about it.
There is no replacement. There is no substitute for oil price, guys. This is a clear message. Don't. I mean, you can play proxy for a while, but proxy is conditioned to several factors.
Yeah.
Okay,
So, and if you're
and
trading oil, um, I know Sachin, you don't trade anymore. I do. So if you're trading oil through futures or E-mini or whatever you're trading through, make sure that you have stops in place always, because it's very, very volatile these days. Wide stops, small positions. I take very, very tiny positions. I take multiple trades, but tiny positions, because the price, it's up one morning, it's not another. It cycles throughout the day. So just be careful.
I agree, because it's very easy to get a cocky in this a lot of time. I mean, I was doing pretty good. I kind of thought myself as a player, and I went even big and big and big, and unless I was burned badly. Okay, this was the worst trade of my life. Okay, and I kind of got frozen, and it was like whoop. That's why I became very cautious in terms of trading after that. So just be careful, guys. I mean, focus. I mean, if you wanna still go with the companies, try to find the companies which have active trading arms, because if you have active trading arms, at least they will capture some value of the notches in the oil prices that are coming up. It will not be one to one, but it will still be something. Try to find companies which do not have any exposure to Russia. Try to find companies who are just coming out of who came out of bankruptcy, has converted a lot of their debts. Like I know a lot of companies in US has converted 80 to
Yes.
90% of their debt to equity. And some of these companies, I was seeing the recent filing, they didn't even have any debt now. Okay, and now suddenly they are
This
producing.
guy. Devon Energy did that. I think they paid off a lot of their debt and they're paying, dividends like crazy. So
Yes.
that's one. But I think the price has run up a lot now. Um,
Yes. So
so
just be
even if you're
careful. I mean,
looking to
yeah.
buy, it should be like wait for a pullback before you do.
Yeah, I mean, again, it's just a view, no financial advice, guys, here. Okay, this is how we
Yeah.
see and we review the companies. So hopefully this discussion has helped you in understanding just the context. Just remember one thing, the final summary is what on the slide here. We don't see intervention, the oil price is not going to stop rising. Okay, so just be prepared for it. Okay, hey Aisha, I really appreciate for your time. Thanks for coming, and it's always great to chat with you and learn things from you. Hope to see you
Thank
again
you.
soon, and let's see what happens on the oil price in 2 weeks, Aisha.
Thank you so much, Sachin. Thank you for having me on. It was very interesting, a little scary, but a very interesting conversation. We should do it again.
Okay, thanks everyone. Really appreciate. Okay, bye.
Thank you.